going into the main sound bites, I suppose the Trump tax situation, the victory there, inverted commas, is the main mover on the markets this morning. It's getting the popular markets there. You can see the massive moves there higher for FTSE, DAX, and Wall Street, as if Wall Street needed any more. On the upside, Bitcoin also up 5%, rather wobbly late yesterday evening, but bounced back after that. There was some news that the UK's Treasury is going to look into regulating Bitcoin on the basis that some nasty people may be using the cryptocurrency to not pay as much tax as they maybe could, or hide how much money they have. I can't believe that would ever happen in this day and age. The main problem with that one is that the whole point of Bitcoin and the cryptocurrencies was that people like the Treasury and other organizations aren't able to regulate it, but clearly the Treasury hasn't found that out yet, slightly behind the curve. As far as the movements on the markets are concerned, we've got, I suppose, the obvious thing you can see, let's say, with the overnight Wall Street jump, that gap to the upside caught people by surprise. Gaps are not normally an admission of surprise in the market, and you can see this channel really here heading towards the 25,000 zone for the Dow. It would be rather difficult to imagine how it wouldn't go towards that area over the next couple of sessions. Big swing as well on the DAX, if I can try and get that through here to the upside. So similar situation where you have a gap higher consolidating at or above former resistance, in this case 13,000, and then heading to another higher plane, let us say. Again, here on the 5-minute chart, you'd be looking for, even on this scale, you'd be looking for considerable upside. And then on the FTSE 100, which I suppose is a surprise for me, because I think here the whole Brexit situation in utter shambles. Prime Minister May obviously couldn't arrange a tea party, let alone, or even a chimps tea party, let alone any Brexit negotiations. Especially she doesn't actually want to have a Brexit, so that's a slight impediment to making progress. So here the FTSE, the underperformer, really, despite the gap higher, would be quite a challenge, I think, for this market to break that initial peak that we saw. And as I mentioned last week, 73.80 seems to be a key pivotal level for this market. We couldn't break that overnight, and we'll see whether that goes. It'd be surprising if we can get through that, and obviously after that there's 74.20 as well. On the currencies front, I suppose the eye-catching situation here is obviously the opposite on the currencies here, with the gap down and then consolidation and then down for the euro, but rather loath to go much below 118.50 at this stage, and I think it's quite surprising if it stayed below that. 118.20 then obviously support after that. If you are bullish, was basically a perennial bull of the euro anyway, you might be waiting for the breakthrough 118.80 really before going into this as a momentum trade, and then finding 1940 after that. So this could be a bear trap zone here for the euro. On to the pound, and obviously those political uncertainties hitting this market as well. Here we've got that 134.40 area broken, but obviously we are in the sort of the opening gambit of the currency markets on a Monday, and it normally tends to be that you get the wrong move first rather than the right one. We'll see how it goes, but obviously 134.40 the level in play in terms of old support becoming new resistance for this market. Finishing off on my little sweep here for the time being at least. Dollar yen. This is on the 15-minute chart. And here we've had this push to the upside through the 113 area, and really one would be expecting, obviously with such a risk-on atmosphere at the moment that we have, that we will progress within a channel perhaps as wide as that. That looks to be a reasonable estimation of where we're going. So 114, 114.10 perhaps on track over the next 24 hours or so, especially where we're above 112.70. Let's go over to Russell Jones, who seems to be apparently is lurking in the background. How are you today, Russell?
Oh, good morning. I'm fine, Zach. It's fine. I just want to do a little quick overview of some of the press over the weekend, a little few updates on my thoughts on a few bits and pieces. There was no specific results out this morning, so I'm not going to do any kind of results write-up. There's nothing of any note there. In terms of the press, mergers, the big one which has come through and has been confirmed, it's just about to go through final stage, is CVS, the healthcare company, the US's biggest drugstore. They're going to acquire the third largest USA healthcare insurer, Athena. What's interesting here is obviously it's come about because of the rumours of Amazon going into pharma as they broaden their market and try and take over the world. But this deal is a 68 billion takeover, and it will create the largest leader in the prescription drug sector, and further acquisitions will probably follow. If you include the debt, it's 77 billion. There's further conversations on the papers around Sky, and obviously what I mean by that is Fox is talking about selling off to Disney its entertainment division and some of its news assets, including 39% of Sky. The broadcaster itself is not the main requirement for Disney. However, they apparently are looking at that as a package. But Comcast and Verizon are equally getting involved. I think it's because of the lack of speed with the government in putting it through. We should have approved the Sky deal. You know, they separated the divisions. It's not happened. The share price.
No, but the government doesn't like Rupert Murdoch. That's why we haven't.
Well, the government's becoming so PC correct on everything. If anyone shouts up about it, then it's exactly the same with Brexit. Deals don't go through, but we're supposed to be a country to attract investments, and that basically is a bad sign for the city that the simple Sky deal didn't go through, and now Murdoch's breaking up his Fox News, breaking up his company.
Oh, okay.
Telegraph, the confirmation, it was discussed last week, the Cineworld deal, 2.7 reverse takeover of Regal. And that's apparently going to go through. And obviously that 1.4 billion takeover of 2.5 billion company has been highlighted in the Telegraph over the weekend. I don't know if you've got any comments on that, you know, on any of those three, Zach?
No, I mean, I suppose for me, the Fox thing was, or the Sky thing was abysmal. It was a Mickey Mouse deal, and for that to be blocked was ridiculous. The other deals are like they are significant, but not really trading, not really big on the trading side. I think so. That's you know, that sort of sums them up really.
It's more of a background really, but obviously it just shows the scale. In terms of tips in the press over the weekend, I'll very quickly go through these. Hollywood Bowl was in Midas in the Mail. They're promoting it. They're saying that obviously there's upside in that sector. I don't see there's a massive upside. I don't see there's a trade. I think there's better investments out there, but it's the one that's promoted as the best buy in the Mail for the weekend. The ITV one, you might want to pull that one up, Zach, because I think we talked yesterday briefly. It's in the Telegraph, and the ITV shares deal may be of an attraction to some people because there's been talk of a takeover on this company for some significant time. This was the Questa stock pick for the weekend, and despite the decline in the advertisers' revenue, they're saying that trading next year will have a huge benefit from the World Cup, which is probably obviously one of the main reasons that people advertise with the increase of the figures. But as you know, the chart doesn't look very healthy, but the new person coming in, which is Dame Carolyn McCall, apparently is not going to be doing share buybacks and returning money. They're going to look at more of an investment basis, and they should see that the share price should recover. Any thoughts on that, Zach?
I'm not a great fan of Dame Carolyn, so I don't think she's going to really be able to achieve anything. I think that I think the last guy, Crozier, if he couldn't turn the thing around, I don't think she can. But you know, the problem with ITV is that as an independent company, you know, in a world of Amazon and Netflix, it's just going to get blown out of the water. I mean, it's you know, it's the equivalent of one of the it's like a high street chain versus the Amazons in its area. So if there isn't any M&A speculation, it should be soliciting it because it's got nowhere to go.
Well, again, I don't disagree with you. I think obviously, especially if Sky gets taken over, the movement in the market is not going to favour ITV. McCall's has been tipped as a buy as a result of the fall of P&H Group last week. Palmer and Harvey, they reckon that there's a price target of 300p on that, and it's an acquisition opportunity. That's in the Mail Online. And they also say sell Thomas Cook. Well, Thomas Cook, which is an odd one, it's rid of that rebound scenario we talked about last week.
Yeah.
After selling off over 10%, it recovered for the entire week. Yeah. So, that just shows how there's a bounce back on some of these sectors. There was no upgrades or anything of that nature. It was just a recovery back. In terms of the three stocks I'm going to do this morning, I'm going to hand across to you at the back of the show. But I just wanted to talk about two more aspects. Obviously, I think with the dollar strengthening overnight, and this is where the trading opportunity comes in this morning, I believe. Now, obviously, you've all got your own kind of preferences, but the pound is down this morning to 134.37. Although that's stronger than what it has been historically of late, it's still a drop of 0.5, 0.6%. Now, copper is up overnight quite strongly, and zinc is especially up. Last time we saw risk on, we got Dow futures up 230 points. FTSE futures opening in 14 minutes are up almost 60 points. I think we're going to see some moves in about 3 or 4 different sectors. The one which I like, and it's a trading opportunity, is the miners. I think we could see a move on that today. There was a big fall off on them on Friday. Glencore dropped over 25p. I think there's going to be an opportunity with the stronger dollar earners, industrial metals being stronger. There could be a surge in that sector. I also believe there's going to be movements in some of the other sectors linked to Brexit, which we saw last week. But you'll have to keep an eye on banks and housing and retailing. In terms of being careful, if you do dip into these sectors, bear in mind that last week Toys R Us confirmed the closure of a third of their stores. And considering it's coming up to their peak time, of the 105 stores, there's going to be 800 jobs lost. We talked about Thomas Cook, they're closing 50 stores. As everything changes, we know about the banking moves last week, 259 closures for RBS Group, and obviously Lloyd's the previous week. And obviously P&H Group, the distributor, went bust, 2,500 jobs lost. So, that's the overview on motor. But I just want to finish myself, Zach, on Bitcoin, the incredible story of Bitcoin. Over the weekend, obviously, I'll be clear, I've said I've invested in this. There were so many press articles on Bitcoin, you could literally pick up a paper and find 3 or 4 in each. The first Bitcoin billionaires have been created, the Winklevoss twins. This was highlighted in the front of the Telegraph business section. They invested £8 million, $11 million into Bitcoin, and these guys were obviously renowned for challenging the Facebook creation, but they've made $1 billion out of Bitcoin. And then you've got the strong news, which is the approval of CME Group, CBOE, the global markets in Chicago. The regulatory green light's been given on Bitcoin futures. Cantor Fitzgerald, self-certifying Bitcoin binary options. Nasdaq futures, as said last Friday, they're going to be trading Bitcoin from the beginning of next year. Interestingly, JP Morgan's head, Jamie Dimon, one of the main critics of Bitcoin, and obviously he's totally against the concept. Well, due to investor interest, JP Morgan has said they're going to start trading Bitcoin they're looking at mediums now in the near future. So all the major Americans are moving into it, despite this regulatory issue highlighted in front of the Telegraph, which Zach mentioned. What's
going to happen? What's going to happen with it? The Treasury are going to make a monkey out of them. Well, they already have, but I mean, they can't do anything. I mean, am I reading that right or not? I mean, the whole point of Bitcoin is that you can't regulate it.
We discussed this. Bitcoin is a finite. They've mined 1.6 of the proportion of the coins. Once they get the rest of the coins out of the ground, out of the system, it's not out of the ground, of the system, basically the price is going to go up. It's non-regulated. They can't regulate it. So even the Chinese have tried to stop it, and they're still trading it via Japan. So unless everyone stops it, and there's too much on the world agenda to stop it, it's only got a market capitalization currently of $190 billion. But even if it went up tenfold, it'd still be less than what the capitalization of the Nasdaq was when it went with the bubble in 2000. And look at the Nasdaq today. So I think Bitcoin is going to drive forward. On CNBC last week, it was an interview where two people were supported in the studio, and they were saying that Bitcoin is going to go up to a ridiculously high, it seems, but $1 million a coin. You got the lingerie specialist Michelle Morn, who was on CNBC, promoting the sale of properties in Dubai by Bitcoin about 2 months ago. In the Mail this weekend, she's saying Bitcoin's going to go to 100,000. Now, she may not be financially astute, but I'm sure her husband is, or a new partner. Martin
That's
Lewis.
very kind of you to say that.
Yes. Martin Lewis from MoneySupermarket.com. Obviously well known, respected. I was in a Twitter exchange with him towards the back end of last week. He sent out a tweet of his update, and should you invest in Bitcoin? Now, as more and more people are bringing this to the mainstream and the awareness of it to the general public who are totally ignorant to it, you're going to find the interest is just going to magnify exponentially. Martin Lewis says on the back end of his article that obviously he highlighted that there aren't ETFs at the moment on this, but he emphasized there are Swedish trackers, which is what I use. What's interesting on that, I had an interchange with him around that. And then if you look at the Times over the weekend, on page 24, Peter Conradi, he's actually admitted he bought Bitcoin. So, and he's used one of the trackers from Sweden, which is the XBT Tracker 1, which went up incidentally on Friday by almost 12%. Over the weekend, you had a personal story of just a general member of the public who's 40% up of Bitcoin in the Mail. So the volatility on this is the scary stuff which people need to be wary of. You can lose all your money. I went into it last week. Now, people may not be aware, but obviously at 8:40 last night, Bitcoin was approaching 12,000. It was 11,892. And I was watching sport, catching up on a bit of the Mail, and then it dropped. And this is the scary stuff. You've got to have big conkers for this one if you're going to go into it, because that dropped 800 points within 2 minutes, and it continued to fall down to 10,400. So it lost 1,400 points within 2 hours. It recovered back up to above 11,300 before midnight last night. As we stand this morning, it's on 11,560. It hasn't got massive coverage this morning. I've been in exchange with Karen Choi on CNBC this morning. I got a few kind of people that talk to me via Twitter, and I've been interested. They've done a promotion on Bitcoin this morning again, and they're talking about the de-risking. But I think to not be in Bitcoin as a proportion of your money, I think you're daft. Not to have a small exposure, to be prepared to actually lose it. However, if you do it on CFDs, and that is really, really important. If you do it on CFDs, you basically need to be aware that when they have these massive moves on these spread betting accounts, you can lose the lot on the margin call.
I mean, that's why, apart from your tracker fund, it's really better to be in stocks, I suppose, or also be in stocks which are
Exactly.
geared
And
towards
that's why
Bitcoin.
I'm going to link across to you, Zach, and obviously I've talked not Pacific. There's 3 stocks which we've discussed, and I'd like you to look at them, please, which is Vela, Blue Star, Capital, and Milestone Group, and I'll hand across to yourself.
Yeah, these are the players. We don't have enough time to go into exactly what they do, which is quite lucky because for me it's rocket science. But Vela Technologies, maybe you want to check that out. Currently around 4.48. Obviously bounced over the last week with the move we had last week in Bitcoin. Obviously, we've moved again over the weekend, as we tend to. Weekends obviously like the busiest time for this market. Milestone Group, another one, MSG on the London market. That has its fans, had a great move last week as well. And the final play, which was one of the top volume movers on Friday, rather strangely, let's say, Blue Star Capital, Satoshi Pay Investment. That is also looking like an interesting chart as well. So those are 3 plays to look at on that basis. That, I mean, they're obviously rather binary, given if Bitcoin does collapse, but they are penny stocks, and the volatility is probably easier to ride out on that with a small holding than it is on a leveraged situation like a CFD or a spread bet. But I'm aware we are rather late in terms of timing today, so thank you to Russell. And over to our next guest, I presume is John.
Good morning, Zach. Morning, Simon.
Good morning, John.
How are we doing?
I'm still in that car park you left me, actually. Just feeling very rough. I was at this event. I was at the Share Talk event on. Apparently, I was at the Share Talk event on late Friday, early Saturday in Walsall, and it really is. There is glamour there. Just you can from the window of the hotel, you could see the M6. I think it was. It was quite glamorous.
No,
So, what have you got on your plate? What have you got on your plate today, John?
Well, there's a few things out this morning, but that look very interesting. But I'm only going to cover the one. So, firstly, I would say actually, if you're interested in mining, have a look at Friday's big winner, which was Tertiary Minerals, ticker TYM. Not going to say too much about it now, but that looks to have some legs in it. I think it was up about 200% on Friday, but it's definitely something you should be looking at if you're into mining. So, but today's thing is Rebold Resources, RBD. So Rebold Resources are an oil and gas investment play. So they've recently invested into the UK Corallian Energy, which are based just offshore by BP's Witch Farm play. They've bought a percentage of that recently, and today they've just announced a 29% stake acquisition of Danube Petroleum, which is a subsidiary of ASX-listed ADX Energy, which is essentially a Romanian oil and gas play onshore. So the prospect they're looking to invest in essentially is it's been highlighted that it has 33 billion cubic feet of gas and up to 45 million barrels of oil. So there will be 2 wells that they will be drilling in the second half of 2018. And they've taken this 29% interest with an option to put a director on the board of Danube Petroleum for a price of around 1.5 million, which is roughly equating to about £1 a share. And they've got a further option to acquire another 375k's worth of shares in Danube Petroleum at the same price within 6 months. So I think what Rebold are doing here is they're acquiring a number of sort of highly prospective assets across Europe. This is the second of what we believe will probably be 3 or 4. They raised around 5 million, having about 1 million in the bank already, so they've got about 6 million cash, of which they've now spent about 3 million. So there's another 3 million to play with there. And what they seem to be doing is lining up a number of highly prospective drills throughout 2018. So the Coulter play, which is the UK play adjacent to Witch Farm, that will be drilled in the first half of 2018. The 2 wells on this Romanian onshore play, which are, from by all accounts, are linked to current infrastructure, very low capex requirements. they will be drilled in the second half of 2018. So it'd be very interesting to see what their final asset or further next couple of assets will be. But it looks like we're going to have some regular news flow from this company next year, which, looking at the size of this gas play, comparing it to other gas plays out there, this is huge. 33 million cubic feet of gas is, you compare this to Ascent Resources, which they say is a maximum of 8 to 11 million. So that's a play that's taken them something like 4 years to get on track. This is something, the Rebold management are looking to get going within the next 6 months. So I think this is going to offer significant upside to the current share price. They're doing a presentation tonight in London at Turner Pope. So I think if anyone's interested, get yourself down to that presentation. I think there's information online on Rebold's website, rebold.com. It's at 0.75 pence at the moment, so we'll see how it does today, but I'm expecting it to do good things.
Isn't a good thing there from somebody who knows relatively little about this company, apart from the share price and the keen investor interest, is that it is the cash position. I mean, they seem to be properly funded, which rather than the normal wing and a prayer stuff that you get at this end of the market.
Yeah, so the joint CEOs who've come on recently, Stephen Williams and Sasha Otzin, they're both ex-Guinness fund managers with a specific background in oil and gas. So this is an industry they've been in for the last sort of 10 to 15 years, and they're going for low cost, high value assets, which they've done due diligence on a number of assets, and this is just the start, I think, of what I think they're going to build up a significant portfolio across Europe. So I think while these look highly prospective, there's a lot more to come from this company, and we're hoping to interview them soon on Share Talk. And ideally, we would love to get them at our next event in Manchester, but we will have to see.
Okay, well, I'm sure if they could have as good a time as I had on Friday and Saturday, they'd be rushing to your next event.
I'm sure. Thank you, Zach.
Thank you, John. Right, we're off to our old friend Ian Foster to look at the major markets, hopefully in a more rigorous way than I did some minutes ago. Are you there, Ian?
I'm here, Zach.
Okay, well, what are we looking at today? What are we looking at? Quite active, actually.
Everything good?
Yes, it's very good. As I said, it was quite an active sort of overnight move.
Well, certainly. Well, it was only to be expected with the news coming out in the early hours of Saturday morning UK time here, that they're hopefully going to hammer out a deal, or it's going to look like hammering out a deal for this tax reform bill. But it hasn't moved probably the way, well, as yet. There has been certainly some movement as far as the currency is concerned. You can see here on the cable here that we gapped down last night in the open, and we've tried to rally and we've come off again, and that has a reflection here on the intraday 5-minute chart. You can see with the red bars here. The 5-minute chart and the 15-minute chart is both red. You can see the bounce here. And at this stage, I think this bounce at this minute in time, although we have come down and just broken through a previous support line here, this bounce here should be used, providing the bars remain red, as a further opportunity to go short this market. And it means that you're reducing your risk. If you are not taking a trade down here, you're waiting on getting a lower confirmed vertical bar trading pattern high. And the same, dare I say it, with the euro, although it's looking a little bit stronger. And this again is we're only talking about as we see in front of us at this minute in time, because the bigger picture, if you take a look at the weekly charts, actually it turns it actually quite completely around in its head on both those two markets, both the euro dollar and cable, the sterling dollar, pound dollar. where it looks very much a bullish sign. So in other words, in the bigger picture, any sell-offs here at the minute could be used perhaps later on in the week as opportunities to buy. And the same with the Japanese yen here. You know, we had gone into 3 days, started off last Tuesday, an outside vertical bar to the upside, and 3 fantastic days that brought this market from the close on Tuesday to under 149 up to 152, with 300 to 400 pip move in that easily. And again, you can see tried to come off on Friday, and sterling again, the yen here is looking pretty strong here this morning, and that also has a reflection on the 60-minute with the blue bars in place. So again, the city of trade what we see in front of us, and short opportunities, I would say yes. Any rallies at the minute, shorting opportunities on both cable and the euro dollar. Getting on to the indices very quickly. I know we're well behind schedule time-wise at this minute in time, so I'll not keep you looking at the FTSE. You can see there's a bit of movement here in the FTSE. There's the opening. There's the official opening just after taking place in this first large bar. I have to honestly say that the FTSE looks weaker than certainly America is very strong. I think the European, the DAX is also on a bigger picture. I know the DAX is up quite considerably, this morning, but there's a lot of room for the DAX to move before it's actually going to negate last week's bearishness, I believe. I know we've got Christmas coming with the Christmas rally we keep talking about, but will it happen? Perhaps it will. But the FTSE here, the key figure as far as the upside is concerned is 7472. An outside weekly vertical bar to the downside. That is bearish from a technical analysis perspective, price action perspective, rather, I should say, on the chart. And the DAX is, although we've got the blue bars coming off here at the minute, this could be an opportunity to go further long or retracement, providing the blue bars stay in place, a 5-minute chart. But again, looking at the bigger picture, this weekly bar is a little bit distorted because I'm using IG in this MT4 platform, and they have actually used the closing price as the Sunday night price, last night price, but the official price last week was actually closed at 947, which would leave the weekly DAX bar a bearish bar, and therefore the high price it needs to break to negate this bearishness last week is 13196. So that is what I'm looking for at this minute in time. So again, look, on the short term, which is what we're talking about, trading opportunities today, this morning, I would say shorting the couple of major currencies that we look at, and going long the indices. Bitcoin, Zach, before you look, a great trade I had, what could have been so much better over the weekend. Sorry, that's just my notifications. Here was our trade on Friday evening. Again, you can see it was up another 1,000 points, plus I ended up getting 487 points last night and 87 points or something. So it's still at a 500-point weekend in Bitcoin. I'm just after going long Bitcoin again here. You can see the first blue bar here in the 30-minute chart. We know that that dropped off very considerably when this news came out last night that the UK government was going to try and regulate it. Well, I think if we had been really not using the methodology, I think if we really want to be bullish or ballsy, as the saying goes, excuse for that pun, for 8:08 in the AM on a Monday morning, I think there was an opportunity down here just above 10,209. I think about 10,250 it went to buy the market. So it'll be interesting to see what happens here. I have a 200-point stop on Bitcoin on my recent trade. So that is my analysis so far this morning.
Ian, thank you very much. We'll see what happens. As you mentioned, we are running a bit late, but obviously we had so much information from young Russell that it was too difficult to resist listening to him. He's bigger than me as well. So basically, thank you very much, Ian, and we'll speak to you tomorrow, hopefully at the same time. Just want to finish off with one or two stock movers, the early ones. In the volume side, Prospects Oil and Gas up 4%. It's a chart that I like. Hopefully the stock will behave itself. CITV obviously responding to coverage over the weekend. In the big movers there, probably the highlights there, Highland Natural Resources, Kefi Minerals, as I said, Prospects Oil and Gas, and Genel Energy also getting stronger as well. On the downside, it looks like something horrific going on at Associated British Foods, but we'll have to come back to that because I don't know anything about the fundamentals there this morning. Serica Energy, one of last week's big gainers, back below 60 pence on that after that spike on the BP deal. We shall see how that goes. And Prairie Mining slipping a little bit after the Share Talk event on Friday. Although I have to say I thought it was a very good presentation on the world of coking coal and steel. But we'll see how they go later on today. That's it from me. That's it for the show on Monday, and hopefully see you tomorrow.
Zach, we've actually got our special guest, David Paul.
Oh, did we?
Started. Yes, sorry, my bad. Perhaps I didn't make it clear, but David's waiting in the room for his weekly update, start of the week. So if we can go across to David, you should be able to speak, and we should be able to hear you, David. Good morning.
Yes, morning, Simon. How are you?
Oh, very well, very well. Good to have you with us. I think I probably didn't make Zach aware of the schedule.
Well, no, I think I know. To be fair, I should have been aware that as it's Monday, it's David Paul Day.
No worries, no worries.
Good to have you. Shall we go across to your screen?
Sure.
Okay, great. We're looking at the market timing indicator at the moment.
That's correct. Yes, that's correct.
So what's been happening with the signals?
Okay, well, good morning, everyone. Since November the 17th, the UK market has been trending downwards, and our advice is to pretty much just be very careful and stay away from it. But at Activist, we believe that everybody should know whether the market is rising or falling. Everything follows from that. So since November the 17th, the market has been trending downwards, and so this little move down, exhaustion down last week, has been no surprise. The market timing indicator is down here, and there is a little bit of divergence setting up where the price is still making a rising bottom, but the indicator is making a falling bottom. If I go to a shorter time frame, we can see that Friday's low, in fact, was exactly 78% of the rise up the page. As you can see, that last rise up the page had 5 waves in it, and it's come back in 3. So this is a very important level, gentlemen, very important level indeed. And if this level doesn't hold, then we've probably got quite a bit more downside in front of us. So very important level during the course of the day. Just here, this pattern that was made famous by one of your countrymen, Simon, a Scotsman by the name of Gartley, who felt that a 3-wave sell-off where this wave and this wave were the same was a very bullish pattern. So if old Gartley were around, and I think he died about 100 years ago, but if he was around, he would have been a buyer right at that low. So that's the most optimistic thing that I can say. But in terms of the trends are strongly down. Okay. So VictorVest advocates doing nothing and waiting for at least the short-term trend to turn. And at the moment, both the short-term trend and the long-term trend are down. And if I go to the home page, VictorVest doesn't advocate buying stocks at this time. Simple as that. Short-term trend is down, the long-term trend is down, and the long-term trend has been confirmed down by price action. So always got some shares to look at. So and a few shares that I like the look of. This was something I talked about last Monday, Farm, and as you can see, undervalued, growing earnings strongly, and it burst from a pound to 120, 125, 130. Trading inside bars, and if it should break up, then I think there's probably another leg in it, but many swing traders would be long gone if they bought it at a pound and could sold at £1.30. So that was quite a nice move out of that triangle. It's probably a bit more in that, as you can see. Games Workshop didn't go so well, and Games Workshop in fact broke downwards. And if I put on the general market, as you can see, was going down. And again, Games Workshop I'm still holding the share, but if you look at it and I take away the valuation, that low is an exact 62% of this last range, and it was a very good trading update on Games Workshop Thursday or Friday last week, I think Friday, and it actually moved up strongly. So if we were to see Games Workshop folks turning to a buy recommendation, and the general market shows some life, in other words, that low that I spoke about in the general market holds, then I think that Games Workshop is a strong buy from these levels. Okay, it's just very, very strong update. I'm sure you read the update. Always worrying when a share that nobody knows about gets to the newspaper, but nevertheless, I think it was featured in nothing less than the Evening Standard on Friday night. So that low, as you can see, an exact 62% of this run up the page, that leg down and that leg down are pretty much the same. And again, that's the second Gartley pattern of the morning. Okay, so that inside bar always quite strong, and if it were to break up through those levels, then the game is back on again. Okay. So the next one is Volex. Volex growing very nicely indeed. And again, I put on my valuation. The valuation is 108. It's trading at 83 and trending up. And there's the general market from that little triangle moving down. And as you can see, Volex just waving bye-bye to the general market. So moving up quite strongly indeed. That looks good. It certainly is a hold. And if we follow the VectorVest rules, then we shouldn't be buying any stocks. But if you've got them, certainly not. Hold on to that one. Griffin Mining has gone sideways where the gold market has been coming off a little bit. That looks good. That's certainly a hold. I've got a position in Gleason, a small building company, and it's on a buy recommendation. It's well above its stop loss. It's doing its best to break up the page here. I should have taken that off, and I think that there's a move coming in Gleason relatively soon. Okay. Taptica, again, is on a buy recommendation on VectorVest. General market is falling, but it managed to actually move up strongly, certainly on Friday, from this little flag pattern that it's traded, and Taptica looks quite strong to me. I think when the general market comes to the party, then we've got a move up here towards £6 on Taptica. Stobart, as you can see, look at the correlation between Stobart and the general market here. There was a signal from the general market that ran up the page. It's now within the confines of this 5-wave flag pattern, like so. And the flag pattern, to me, looks as if it's just about to complete. As you can see, we've 1, 2, 3, 4, and 5. Now the general market has been falling here, but apart from Friday when it was down a few pence, this is flat. So my theory is, and I wrote about it yesterday, is that if the general market prints one of these green triangles, i.e. it's rising, and we move to a buy recommendation in VectorVest, that there's another leg up in Stobart. I've done nothing yet, I haven't bought any, but I like the look of it, and I think you should watch that in the next day or two. TriFast, I'm still holding, going sideways while the general market sort of sells off. I think this is a strong move up. I spoke about that last week. Clydesdale Bank is a share that I'm looking at. It's on a buy recommendation on VectorVest, and undervalued, growing earnings strongly. And if I put in a very important line here, as you can see, lots and lots of resistance that's become support, and it's pushing on these highs, and it's done nothing when the general market has been falling. I think that if we do see a little bit of strength in the general market, then Clydesdale Bank is going to move up the page strongly. And Countryside Properties, you little bugger, the venture capital company that are private equity company that owned 10% of the company, chose Friday to get rid of 7%, and they did a book building exercise with the institutional investors, and they gave them a 20p sweetener. So that caused Countryside Properties to come back. So on Friday, 7% of the company was traded in this particular bar, and it was all placed to institutional investors. I'm not yet sure who those institutional investors were. I'm going to try and find that out, but nevertheless 7% of the company was transferred on Friday, and they give them a 20% sweetener. So the market has come back to where this resistance becomes support, and certainly as long as it hangs around these levels, then I'm okay. And I'm okay with it. So those are the shares that I'm looking at this morning, folks. But nevertheless, VectorVest says that the trends are down, and they have been down since this point. And short-term traders should wait for at least the short-term trend to turn up before doing anything, and more conservative players should wait for the market to print one of these green triangles or a confirmed call upwards. We recommend buying into undervalued shares that are growing their earnings aggressively and safely when the market is rising. And the shares that I've just spoken to you about are all growing their earnings aggressively, and they're all undervalued. The only thing that's not coming to the party, Zach, is the general market is not rising.
Okay, I see that Imbu Pharma is up 4% today, which is a nice start.
That's good, because I thought it had more legs in it, and that's a good start for sure. I thought it had much more legs in it. So if it breaks above, it's charting what I call a multiple inside bar. If it breaks the highs of this bar, then it's probably got quite a bit more legs in it, yes. Up to the 160, 170 level, yeah.
Thank you, David. Thank you, and so apologies for not realizing that you were on at the end of the show. We've made up for that, and I will remember next Monday.
Okay.
Thank you very much indeed. That's it for that. It really is it for the show, and we will regroup tomorrow at 7:30.